Hello, and welcome to a new edition of Merrill's Monday Morning Market Madness. Today, I'm going to be talking to you about the Phoenix housing market and talk a little bit about whether or not we have a possible housing crash coming. It's probably the biggest, most often asked question that I get is, but when is the housing going to crash? Tons of people are out of work, and so we're going to take a look at some of those numbers and see what everything is telling us so far. I'm going to start with some quick stats for you. Right now, there are 8,386 active listings. There are 14,048 pending listings, a very, very high number. We continue to sit in the high 13,000 to low 14,000 range in terms of the total number of listings that are under contract at any given time. I don't know, 6 months ago or so, I made a big deal about how we had hit this milestone where there were actually more pending listings than there were active listings. Now we're up to pretty soon. It feels like we're going to have twice as many, but we're well over 1.5 times more pending listings than there are active. So if you're driving around, you feel like you see a lot of signs in yards or that kind of thing, keep in mind that well over half of what you're seeing is already under contract. In the past 30 days, we've had 8,486 homes close for a month's supply of inventory of 0.99. I'm broadcasting this show onto a couple of new channels, so just let me explain that number real quick. Pretend in a world where if no new homes were allowed to come on the market, how long would it take for everything that's currently active to sell? And right now we're sitting at just under 1 month, which is a ridiculously low level of inventory, extremely competitive. A lot more buyers than there are homes available to buy them. And so to give you an idea, a month's supply of inventory of 5 and under would be a seller's market, and 6 and over going to start to be into a buyer's market. So typically, if you were at a 4 or a 5 on the month supply of inventory, I would expect home values to be very stable. If you're at a 3 or a 2, I would expect home values to be rising. If you're at a 1 or below, home values are rising rapidly. And we have been under 1 now for a couple of months, and predict that we'll stay very, very close to 1 or under 1, especially with how many pending listings we have. So the market continues to be really, really strong. I wanted to take a look at August a little bit. So this year in August, we sold a total of 9,209 properties in our MLS. And I wanted to give you the last 10 years. And I'm sorry if this is a little too geeky, a little too many numbers for you here, but here's the last 10 years. Last year was 8,918. So again, this year we were at 9,200. Last year we were at 8,900. 2018 was 8,255. 2017 was 8,252. 7,933. 7,061. 6,463. 7,083, 7,511, and in 2011, 8,737. Now, 2011, we were coming out of the, home values were very, very low. And so people were buying, a ton of people, investors and things were picking up rental properties and things like crazy. So that was a high amount of properties selling, but the dollar volume of that was significantly lower. So 2011 was the only, was the highest number, for the, that 2011 to 2017 or so. But 9,209 is what we saw in August this year, which is by far the highest we've ever seen in a August. And so what we're seeing is we continue to have extremely high demand, the highest demand we've ever had. Combine that with the lowest inventory we've ever had. So more homes are selling than ever before, than any of the years out of the last 10 years. I could keep going. I'm sure if I went back 20 years, there still wouldn't be anything higher than 9,209 in the month of August. So highest number of homes to sell in a month, the lowest inventory has ever been. In 2011, I don't have the exact number. I apologize, but I know there was over 30,000 active listings and 8,700 sold. So this year, only 8,300 active listings and 9,200 sold. So I just can't explain more. But if you're a buyer out there and you're looking, like there is multiple offers on almost every property under, I don't know, 4, maybe 500,000, and sometimes even multiple offers on properties above that price point as well. The lower end is extremely more competitive than the higher end, but all of it is seeing home values increase right now, and I don't see that letting up anytime soon. Inventory is just so dramatically low, and I don't know about you, but it feels like we are experiencing a ton of people moving here from other parts of the country. So I wanted to also talk to you about a couple of things. I'm going to share a few slides with you. So let me just share my screen here with you guys real quick. And I just want to show you a couple of slides real quick to talk about what's going on in the market a little bit more. So a huge thing that's affecting our housing market right now is interest rates. Average interest rates are sitting right around 3%. And so affordability is absolutely incredible right now. Matter of fact, just compared to this same time last year, your average home buyer can afford $32,000 more in purchase price without raising their monthly payment. Keep the monthly payment the same, they can spend an average of $32,000 more buying power. And so that is part of it, right? It's really affordable right now to buy a house. Matter of fact, if we go on to the next slide here, this is the affordability index since 1990. And yes, we are higher in terms of the affordability index. We're actually a lot more affordable. The only time where it was more affordable in terms of the affordability index was 2009 through 2015 or so. But we're actually more affordable than last year, the year before that, and the year before that, and pretty similar to the year before that. So affordability right now is actually really good, despite the rapidly rising prices. Affordability is really, really good. As I mentioned previously, the last 10 years, we're seeing inventory continue to decline. Year over year, we keep on losing another 20% of properties available to sell. Our population is continuing to grow. And we're seeing higher demand and lower inventory. And that's a huge part of what's causing home values to rise really quickly. Yeah, but what about all the foreclosures, right? That's the question I get. There's tons of people out of work. There's going to be all these foreclosures. Well, this is a national stat. I don't have local stats for this, unfortunately. But right now, there are about 3.93, almost 4 million people with their mortgage that is currently in forbearance. But here's the interesting thing on that. More than 1 million of the people who have arranged a forbearance are still paying their mortgage. I assume they set up their forbearance so that, just in case they weren't able to make the payment, but most of them are, well, not most of them, a fourth of them are still making their payments. Now, the other thing about that is that if, even if these people cannot keep making their payments and they're going to lose their house, most of the time, in fact, I'm going to go ahead and say like 99% of the time, they're not going to let it go to foreclosure. Why? Because they have equity. Almost nobody is underwater on their house because average home prices have risen 14% in the Phoenix market over the past year. So why would you let your home go into foreclosure? There's even room in the past year to pay a full 6% commission, still make a profit and sell your house. So home values have risen so rapidly that most of these people are going to choose to sell their home on the active market rather than let it go to foreclosure. And so, does that mean we're going to see a huge flood? Even if we saw a huge flood of new listings hitting the market, inventory is so dramatically low, we could triple the number of homes that are currently available for sale and still be in a seller's market. And also another thing is, if you look at the total number of foreclosures that are happening here since 1999, we're at near an all-time low. Again, this is national, but near an all-time low in terms of the number of foreclosures that are happening quarterly, and well below the average line. I mean, even if you look back into a normal market, if you want to call it that, 2002 to 2004, or 1999 to 2004, fairly normal market, maybe to 2006, we're at half as many foreclosures happening right now as there were during those years even. So there's really not going to be a flood of foreclosures onto the market. And ultimately, my point, and I'm done here sharing the slides now, but ultimately my point is that we're really not heading for a housing market crash. People, again, everyone is asking me about, when is the housing market going to crash? And again, I just want to point out that right now, there are absolutely no stats, there's no metrics, there's no numbers that would indicate that we are heading for a housing market crash or bubble. I've shared previous episodes. I'm going to go back and look at our archive. We've had previous episodes talking about some of the other reasons why we're not hitting a crash in terms of, some of the differences now between lending versus then. And over 50% of all homeowners in the United States have at least 50% equity in their home. People are being more conservative. People aren't pulling a ton of equity out and cash out refinances. Yes, they're happening, but it is nothing compared to what we saw in 2006. Shout out to my man, Chris Self. He just posted that in 2009, there were over 50,000 active listings in our MLS. Right now, 8,386. So hopefully that gives you a little bit of perspective. Definitely not heading for a market crash anytime soon. The only thing I could see that might even cause our market to level off, which I would like. I mean, it is just so insane right now. Home values are rising so rapidly, multiple offers on so many properties, so competitive. It wouldn't hurt if it could level off just a little bit. The only thing that would really cause that, leveling off to happen would be if if interest rates rose rapidly, like, from 3% all the way up to 5% in a few weeks. So if we saw a huge increase in average mortgage rates, that would be the one thing that I would say could slow our market down, cause a rise in inventory, maybe cause home values to not be rising so fast. But it will remain a seller's market because of how low inventory is, and I don't see that changing anytime soon. Another one that I get a lot is, well, yeah, but there's all this new construction, there's building happening everywhere. If you go to almost any new build community, they're all on a waiting list. They cannot build the homes as fast as people are moving here and as fast as people want to buy. Some of them are doing lotteries. I went into multiple new builds last weekend who were all saying, yeah, we have no lots available. We have nothing we can sell you right now. And so, if you want to get on our waiting list, or if you want to get into the drawing or the lottery, we're only releasing 4 lots a month because that's all our construction crews can keep up with. So even the builders are not building homes fast enough to support. We're still losing inventory. It's still declining. And so I predict a wild ride. If you have a home, that's awesome. I do believe home values are going to continue to go up. If you don't have a home yet, we need to get you into one now, because affordability is so amazing, and with how quickly home values are rising. So anyway, hit me up. I'd love to help you out. If you guys have any questions, or you want to know more about what I shared today, or any other specific stats, please let me know. I love doing market research, so I'm more than happy to help you out. Thanks so much, and have a great day.